What's up, everybody? So today we're going to actually be starting the process of learning your first signature trade. Okay. Now, what we're going to be talking about today is, in fact, the EMAs. Now, what is the EMAs? They are exponential moving averages. Now, you're going to see normally two different ones. There's going to be simple moving averages and exponential moving averages. The main ones that we use is exponential. Okay. Now, as you can see right here, we use specific ones. And the reason why we use these specific ones is because they correlate all together. Okay. And with these EMAs, they can tell you a variety of different things. You can base the EMAs off of an entry point. You can also exit the market. You can base the EMAs off of trends, which direction the price is going, if it's sideways. I mean, you can literally see the market from using the EMAs. Now, is that the only way to go? Is that like the holy grail of the Forex trading? No, it's just one simple way to read the market. Okay, it's just, it's the beginning of the process. You can also tell when's a pullback happening. You'll see a lot of times price will pull back to these EMAs. So let's go ahead and go into it. Mind the names. I'm sorry, with the nicknames is something that I'm working on. I may even change these up. But so what we're going to see is you're going to be working with the 5 EMA, which is going to be the yellow line. We consider that the mustard. The 13, which is the red line. The 50, which is the sky blue. The 200. And then also we have the 800. Now, again, I did not pick these EMAs just out of randomness. Okay, these are all specific EMAs that work together for the good of your trading. Now, you're also going to see, that they also have certain cross confirmations letting you know when a reversal or when a trend change is going to happen. So let's go ahead and go into detail with it. So whenever you see the 5 and the 13 crossing, that is confirming that a shift is going to happen, and it's letting you know that, hey, this might be a good time to enter or exit the market. Now, is that the only way that you're gonna, pretty much base your trades off of? No, because there's other things that you have to take into account, and you're going to learn that in further courses. You have, one of the things is you got to see that your TDI is good. You also have to see if the candlestick formulates on the 5 moving average. Okay, so there's other things. There's, it's other things that you have to take into play. Also, the 50. Now, the 50 is pretty much, one of the biggest EMAs of all of these EMAs. Why? Because you're going to see, again, remember when I was just saying that price normally bounces off these EMAs? Well, majority of the time, the EMAs and the price bounce off the 50. So the 50 is very important. And then, of course, you have the 200, and then you have the 800. When these happen, when the 50 and the 200 cross, again, it signifies a shift in the market. But right now, we're not talking about confirmations. We're talking about conversions. So I'm going to be explaining this right here, because I know a lot of you guys are wondering, like, what are these lines and what is going on with this? Okay, so what we are looking at is conversion. All right, as you know, with different time frames, it's only showing a closer view of that. So if you're looking at the 4-hour, okay, that's a wider range. And if you go to the 1 hour, that's a closer range of that 4-hour. And even, and so on with the 15-minute. So when we're looking at the 15-minute, okay, the 50 EMA is the 50 EMA, all right? The 200 is the 200, and the 800 is 800. But converting that, looking over to the 1 hour, the 50 will turn into the 13. The 200 will turn into the 50, and the 800 will turn into the 200. Now, why is that? Why will they convert over to these different EMAs on these higher time frames. Why? Because again, as I said before, when you're converting to the 15-minute to the hour, it's a wider spectrum. So these obviously are going to get closer or seem like they're closer to the price. So looking at the 15-minute, it's going to be, a little bit further away from the price. Why? Because it's a closer view. And as you go out further, the EMAs get closer to the price. So the 50 turns into the 13. The 200 turns into the 50. The 800 turns into the 200, and vice versa on the 400. Okay? So, that's all it is. So let's go ahead and take it to the charts. Let me go ahead and show you guys the charts. And I apologize if you hear banging in the background. That is my little brother playing the drums. All right. When he's over here, he loves got him a whole drum set, so he loves to play the drums. So we're looking at the 15-minute chart right now, okay? And on the 15-minute, as you can see, like I said before, it's a closer view, all right? So as we said before, the 50 is the 50 on the 15-minute chart. But if we convert it over, check this out. It's further, right? It's coming. Actually, no, it's coming closer. So now the 15, so the 50 as it was on the 15-minute, now it's become the 200. No, the 13. I'm sorry, the 13. It become the 13 because it's closer. Look how it is, look how it is now. It's closer to the price. And the 200 is a little bit further. Going to the 4 hour, now it's further. Now, I know you're looking at this and you're like, man, this is confusing, man. Like, I don't know if I can get this. It's not there for you, to pretty much remember. It's just there to be an awareness. So that way, that when you are looking at different time frames, that the conversion is going to be a little bit different. That's all. That's what this is here for. So I don't want you to be confused. Don't worry about it. But, you're always going to have that chart to look at the conversion. All right. That's what it's there for. All right. So let me go ahead and go into the crosses. We're going to talk about the crosses. And I'm not going to spend too much time on the conversion because, again, the conversion is just there to just be there as a guidance to let you know that as you go up to different time frames, that your EMAs are going to convert over to different EMAs. All right. So there are two main different crosses that we're going to be talking about tonight, and also that you're going to be learning in the course of this first month. Okay, the two crosses are going to be when you see the 13 and the 50 cross over, that's going to be level 1 confirmation or level 1 lock. That's what that's called. All right, this confirmation lock is not always so as a guaranteed thing letting you know that, hey, there is a definite shift or a definite reversal going to happen. It's just letting you know that this is a confirmation of a shift in the market. Now, when you see this level 2 confirmation goes, this is letting you know right there that there's about to be a major shift in the market and it's getting ready to be a reversal. Now, is that always the case? No, it is not always the case. These are just used as an identification to let you know which way the market is going. You have to also take into account of other things. Like you have to look if the market is going into a diversion. All right. You have to look at, far as head and shoulders. You got to look at your TDI. You got to look at a number of things that you're going to learn throughout your course and throughout your time with iTrade Academy. All right. But for right now, in month 1, you're going to be learning about what? The level 1 and the level 2 lock confirmations. So let's go ahead and go to the charts so I can show you these confirmations again. Okay. So when you're looking at these level 1 and level 2 confirmations, you normally want to look at the hour chart as it said on the chart. you want to look for the hour chart. So as we see right here, let's go ahead and do a closer view on what I'm looking at right here. So as we see right here, we look at this. We said, what was the level one confirmation, guys? We said level one confirmation was when the red, which is the 13, crosses the 50. Okay, that's level one. That happened right up here. And as you see, it went down. That was confirmation of that shift. It kept on going down. Price pulled back to the 50, which we said majority of the times you're going to see price pull back to that 50 moving average. And then what happened? Level two cross, it retested, and the market went down. That's what happened. You see that? These cross confirmations happen all the time. Let's take a look at this right here. Now this is a perfect example of what I was talking about, is that you can't solely go off of just trading the EMAs. You have to take in account of other things. And that's what you're going to be learning further in this course. So you look at this. Let's go ahead and zoom in a little bit closer. You see level one lock confirmation here. All right, when the 13 crossed the 50. And then you see level two right here. But what happened? The EMAs were testing the blue, and then it pulled back, letting us know that all this right here was consolidation. All that was consolidation. Now, if you're wondering what consolidation is, you better go back to that video that I talked about with trends. All right, that's going to be in basic Forex. So that way you can learn about your trend confirmations. Now, as I said again, that's that confirmation. So we're going to zoom out and let's look for more. Let's look for more confirmations. Okay. So the same thing right here. All right. Even though this was a short downtrend, it was still confirming what? A downtrend. And the same thing with the uptrend. All right. So we zoom in. We see our level one confirmation right here. We see our level two confirmation right here. And then what happens? Downtrend. Boom. Downtrend. For weeks. This happened for weeks, guys. And then as we see right here, what happened? Level one, 1350 cross. Level two, 50 and 200 cross. Boom. We got an uptrend. And it just keeps on happening. Now, just because this happens over and over and over again, does that mean that you solely trade off of this? No, I will repeat. No, you do not solely trade off of this, because there's other things that you have to take into account for. That trading off the EMAs is just extra confirmation. That's all it is. Also, you have to take in account of this. When you're looking at the EMAs, you have to realize that the EMAs are the average of 4 hours. Okay, so when you see this cross happen, let me zoom in. So when you see this level one cross happen, do you trade before that, or do you wait for after the candlestick? You wait for after the candlestick. Why? Because it's going to be the overall average. The EMAs are the overall 4 hours of that chart. So if you're looking at the 15-minute, then it's going to be 4 15-minute bars. It's the same thing if you were looking at the hour. You got to look at 4 hours, and throughout the day and throughout the 4 hours. That it's the same thing. It's the average. It's the overall average of the market. So you have to wait for the candlestick to form after that, and then when you see that cross happen, that's when you know that trend is continuing. All right. So you'll always see the EMAs follow behind the price. So again, let's recap. When we're looking at different time zones, we know that the EMAs change. All right, we know that when you're looking at the 15-minute chart, the 50 is the 50, the 200 is the 200, the 800 is the 800. But when you're looking at the hour, the 50 turns into the 13. The 200 turns into the 50. And the 800 turns into the 200. And vice versa with the 4-hour. The 50 turns into the 13. The 200 turns into the 50. And the 800 turns into the 200. All right. We also covered what again? We also covered the level 1 and level 2 crosses. When these cross, this signifies a change in the market, letting us know that it's pulling back or it is going to be a reversal. As you can see here, it is a full reversal until about a week out. And then it does the level 1, level 2 cross and retest, and boom, it drops down. Okay? Drops down for a long time, actually. Wow. So it is a very, very good, confirmation. But again, it's not the only confirmation. We use other confirmations. Like, you have to be aware of this thing. So if you're looking at this, you're saying, okay, cool. So we're looking at this. We see a level 1, level 2 confirmation. All right. I see a head and shoulder happening. Let me know that it's going to be a downtrend. I'm looking at my TDI. Cool. I see a 50-50 bounce. All right. I'm looking at the peak formation high of the week. All right. It formulated that. Cool. And it crossed. That's how you break down the market. When you are entering the market, before you enter the market, before you even think about hitting that button, you have to at least have 10 confirmations before 10 to 11 confirmations letting you know that it is guaranteed to enter the market right now. You have to have so much confidence in yourself that you know that the market is going to go in your favor before you push that button. That's what you're in iTrade for. That's what I'm here to teach you. Okay, so I welcome you in showing you how to trade and how to use these EMAs. All right, on to the next lesson, guys. Hope that was helpful.